Hello, everyone. We have a really good show ahead of us where we interview Mike Townsend, the Managing Director of Legislative and Regulatory Affairs for Charles Schwab and Company. So essentially, he's the main political analyst for Schwab. We talk about the political environment, the attempted assassination, Biden stepping out of the election, thoughts on the future estate tax exemption, what it all means for investors, and so much more. It's a really rich interview. We also cut in after the interview for about 5 to 10 minutes to debrief on a couple important items, some investor takeaways, just adding a little bit more color to the conversation. So without further ado, here's our interview with Mike Townsend.
Do you live in D.C. proper?
I live in Northern Virginia, just outside.
Okay. Got it. What part?
Falls Church.
Yep.
Did work bring you down to that area, Mike? Or did you grow up there?
But like 30 years ago.
Right.
But yeah, no, I actually came to work as a speechwriter in the Senate.
Okay.
That was the start of my career. And I thought I'd do it for a couple of years and never left.
Was that influenced by the West Wing?
I predate the West Wing.
Yeah, what a good show. So do you want to jump right in? I know we're a bit early on our clock, but
sounds good. Yeah.
Good to go. All right, Nick, cue the music, and we'll hop on in. So today we have Mike Townsend with us. Mike Townsend is the Wizard of Washington at Charles Schwab. More specifically, he is Schwab's Managing Director of Legislative and Regulatory Affairs. With over 3 decades immersed in DC politics, he is a political maestro, deciphering how legislative twists, regulatory turns, and political developments impact everyday investors and their advisors. He is also an advocate, developing strategies to communicate important perspectives to policymakers, the media, employees, and clients. Mike is the host of Schwab's hit podcast, Washington Wise, where he unpacks how policy, politics, markets, and the economy collide. Before Schwab, he fine-tuned his craft as a Capitol Hill aide to 2 U.S. senators and worked at Powell Tate Inc., a Washington, D.C. public affairs firm. He is a graduate of Bowdoin College in Maine and holds a master's degree in English from George Mason University. Mike, welcome to Amplified Wealth.
Welcome.
Well, thank you so much for having me. Great to be with you.
So, what inspired you to pursue a career in legislative and regulatory affairs?
It was very kind of serendipitous. I actually graduated from a small college in Maine, as you mentioned. And back in the 90s, the senator from Maine went to that college. He was also a graduate. He reached out to the college and asked if they had any recent grads who were good writers. And he was looking for a speechwriter, and I ended up getting the job. Came down to Washington kind of on a whim. Thought I'd do that for a couple of years, and 30 years later, here I am. Still, it's one of those things. Once you get here, it kind of sucks you in. And my resume makes no sense 10 miles outside of town. So here I am, and enjoying the craziness. And it's certainly particularly crazy this year. So having lots of fun here in Washington.
So were you into politics in college, or was it kind of I got a job, let's fake it till I make it, and then here we are, where now you're going around talking to the media, and you're the guy?
Yeah, absolutely no interest at all in politics. Didn't take a single poli-sci course in college, but loved to write. And so came down here and kind of learned to write speeches, and then just got really interested in the whole game of it all, and all the issues and all the people and all the personalities that make Washington such a fascinating place. Got completely hooked, and yeah, now that's my life.
So do you, during a political season like this, do you accrue your 40-hour work weeks, because you're probably working 24/7 this time of year, and then you get to earn that back in extra vacation time in the off years?
Yeah, I mean, I call this like my Super Bowl season all season long. So
Yeah.
I travel all over the place, talking to clients, talking at conferences, investor conferences about what's going on in Washington, what the election means in particular, what it might mean for the markets, all that sort of thing. So I'll be crazy from Labor Day through Thanksgiving. In particular, get a little bit of a respite in August when things kind of quiet down here in Washington and on the campaign trail. But yeah, this year is it's a crazy one for me.
Is there like a go-to Twitter follower that you stay up to date? Or how do you get your info? I mean, everything is changing so quickly, which obviously we're going to talk about.
Yeah, I mean, I spend a lot of time when I'm here, when I'm not traveling, talking to people up on Capitol Hill on both sides of the aisle and, reading different perspectives as much as I can get. Part of it is trying to kind of cut through all the posturing and messaging and figure out what people are really trying to do, right? Because you see what the headlines are, you see what people are saying in the press release, but, you're trying to get into that conversation with people and say, what's the end game? What are you willing to compromise on and what do you want to do to get something across the finish line? So that's what I spend most of my time doing.
Awesome.
Awesome. Does that happen in formal settings, or is that mostly going out to lunches, dinners, things like that?
Yeah, it's a combination. I try to go to hearings on Capitol Hill or watch them. Now you can watch them all online, that sort of thing. But yeah, a lot of informal interactions, seeing people at lunches or dinners, and also like at the sidelines of my kid's soccer game and stuff like that. So yeah, just trying to kind of gather information wherever I can.
That's great. Okay, so could you kick things off by, I guess, painting a picture of the current political and regulatory landscape in Washington?
Yeah, sure. I mean, I think as everybody knows, we have this split Congress, 51-49 for the Democrats in the Senate. Right now it's 220 to 212 for the Republicans in the House of Representatives, with a couple of vacant seats right now. And, so you've got these really narrow margins and a split between the two parties in the two chambers. Makes it really, really hard to get stuff done. And we've obviously seen that, when the Republicans who lead the House are really struggling to stay unified. We've seen that really since beginning of last year, when they first struggled to find a Speaker of the House and then ultimately ejected that Speaker of the House. They've really struggled to kind of stay all on the same page. And even when they do pass something and stay on the same page, then it goes to the Democrat-controlled Senate and it bogs down there. So it's been really hard to do even basic stuff like funding the government, which is probably Congress's most basic role each year. They're supposed to do that by October 1st, which is the beginning of the government's fiscal year. And this year they finished that process in mid-March. So, it's just been really, really difficult to get stuff done. You layer on top of that an election year atmosphere where, all these guys on Capitol Hill are trying to get reelected, and obviously we have a presidential election. So it's just an atmosphere where there's just, much more bickering and noise than actual, successful legislation. So it's been, I think, a frustrating year for a lot of people in Washington.
It makes for maybe a good movie script, but it's very frustrating for our lives, trying to get things done and try to forecast for investment purposes, right?
Yeah, I think that's absolutely true. And, a lot of times, people are asking me, what is Congress going to do about this or about that? And sometimes you just sort of throw up your hands and they can't find their way, out of a paper bag sometimes. So it's, it's definitely a situation where you hope after the election and next year, the election is behind us, maybe Congress can get more focused on some of the big issues that are out there. But this year has been really a rough ride.
Yeah. So what is out there in terms of outstanding issues? And I mean, realistically, is anything going to get done before the election, or I should say before the end of the year?
Yeah, I mean, before the election, I don't think really. Even the government funding that I mentioned, they're working through that process, but that's something that's going to get punted until after the election. Congress doesn't really have any huge deadlines or big issues that it needs to get done. Interestingly, a lot of the focus right now has been on an issue that's going to be center stage next year, and that's taxes. I think as people may be aware, all of the 2017 tax cuts expire in 2025, at the end of 2025. So we're talking about lower individual income tax rates, a higher standard deduction. Probably the big one from a planning perspective is the estate tax. So the amount of assets that you can inherit and not trigger the estate tax would fall by about half at the end of 2025 if it's not extended. And what's going on right now, that's a 2025 issue, but there's a lot of groundwork being laid by both parties to kind of think through what a tax bill next year would look like. So that's actually one of the things kind of under the surface that's taking a lot of attention right now, in part because there's not a realistic chance of passing much between now and the election. So it's an interesting atmosphere, sort of a look ahead type of atmosphere right now.
So it sounds like it's a lot of laying the groundwork. Is there, because even with like the budget, the government funding, it seems like that's just a new normal of they can't figure it out. They can't figure it out. Is that a sign of the times that maybe that's going to be how it's going to be going forward based on all this posturing and things like that? Or is that a function of just the way the government's split currently?
It's a combination of both. I do think that these kind of basic things have gotten much, much harder than they used to be. Funding the government, you have to pass a budget and you have to pass the 12 appropriations bills that fund every government agency and every federal program. And everybody knows that. You have to do it every year. Right. So, the fact that it's this long drawn out battle where you get to the fall and you're like, are we going to have a government shutdown or are they going to extend funding? And, it's really, really frustrating for a lot of people because exactly what you're talking about, sort of planning ahead has become so difficult. I think that's partly a function of the divide that we have where, there's really no middle in Washington anymore. Both parties kind of way out on the wings. They just want to, fight and be on TV and, say crazy things and all that sort of thing. And that has not led to a productive atmosphere. And when you think about next year, when you have a really big, complex issue like taxes that has to be dealt with, it's worrisome. How are they going to get something like that done? But they find a way, and they'll get something done next year. But it's definitely frustrating right now.
Would you say it's too early to tell which way we're leaning in terms of the estate taxes, things like that?
Yeah, it's too early to tell in part because we don't know what the election outcome is, and that's really going to determine, how this plays out. Right. And what I mean by that is we don't know what the configuration of Washington will be. Who's in the White House, who controls the House, who controls the Senate. And if you have, for example, a Republican sweep, you're having a very different tax discussion next year than if you have a split Congress where you have to negotiate something. One interesting thing I'll say about the estate tax in particular, though, it's actually not a especially partisan issue. There's a lot more sort of overlap on the estate tax in particular than a lot of issues. So it's not like Republicans are here and Democrats are here. Part of that is because there are lots of Democrats who represent, states that have, big family farms and big family ranches and multi-generation family-owned businesses who, kind of understand the estate tax. So I've been saying for a while, I actually think the estate tax is one that's ripe for a compromise. So I think it is probably unlikely that it just expires and goes back to where it was pre-2017. I think it's also unlikely it gets extended to where it is now, and maybe there's some space in the middle for a compromise. So that's definitely one I'll be watching closely.
Let's maybe shift to, say, AI, right? That's been very popular in the news. Is there any sort of middle ground of legislation that you see both Democrats and Republicans reaching some sort of, I don't know what laws or legislations they'll put in place? I know there's been a lot of talk about tariffs, more reshoring of the chip manufacturers, but talk to us a little bit about that because I know that's front and center of the news cycle.
On AI in particular, I think it's an interesting issue because that's actually one where there is a lot of bipartisanship, at least at the moment. And part of the reason for that is it's relatively new. Obviously AI has been around for decades, but in terms of the focus on it over the last year and a half, and the interest in Congress, I think the recognition in Congress that we're going to need to put some, guardrails in place. And so I think Congress is sort of slowly moving towards that. We've seen some guardrails in Europe that may be kind of a model. But, one of the things about this issue is if you had asked me 6 or 8 months ago, there just aren't many members of Congress who know these issues very well. This is not an area where there's a lot of experts on Capitol Hill. So to their credit, they've actually done a good job in both the Senate and the House at sort of educating themselves. The Senate has been holding these bipartisan meetings with experts from tech companies, from think tanks, and all sorts of experts around AI, just to learn about it. And so they are now kind of heading towards legislation. I don't think that gets done in 2024. It's more of a 2025 issue. But I do think there's real bipartisan interest in putting guardrails around the AI world. That said, actually agreeing to the details is going to be really, really tricky. And so it's definitely an issue that I've got my eye on for next year, because I do think there's some momentum there.
Okay, so stay tuned for more.
Yeah. And these guardrails don't necessarily need to be a bad thing for companies, right? From what I understand, a fair amount of companies want the guardrails so they understand how to proceed forward.
Yeah, I mean, I sort of say jokingly that there's some line between, not stifling innovation and ensuring that AI doesn't wipe out humanity. That there's probably a sweet line, a sweet middle in there that Congress is going to try to find. And I think just put some parameters around, the development of AI. I don't think anybody on Capitol Hill wants to stifle innovation or anything like that. But I do think there's some logical places where some guardrails are probably going to be appropriate.
Right. So do you have your eye on the Fed at all? Any take on, what the Fed's going to do for the rest of 2024 or anything like that?
Yeah, I mean, crystal balling the Fed is always hard. I think, Powell and others have been pretty clear in indicating that we're on the right path. They're seeing the data that they want to see. They probably want to see another month or two of that data. I think everybody has their eye on September as the first rate cut. And, barring some dramatic change in the data between now and then, I think that's likely. If that happens, I think you're probably going to get a second cut before the end of the year, maybe at that December meeting. So, 2 cuts kind of feels like the most you could get this year. And then as we look ahead to next year, I think it's going to be slow. Maybe it's 4 rate cuts in 2025 if things continue on the path they're going. I think they're going to be very deliberate, very, probably not a cut every meeting, probably not cuts that are more than 25 basis points. Very, very much slow in the opposite than it went up. I think they'll be very slow going down. So, they're very, very data driven, and pegging exactly what they're going to do is always difficult. But it certainly seems like they're sending the signals that September is the time frame.
Sure.
Trump was pretty critical of Jerome Powell in his first term. If he gets into office, do you see a change maybe from Powell? I don't know if Powell is up for, renewing his seat as the chairman, but talk to us a little bit about, depending on who may win, what could happen with the actual makeup of the Fed.
Yeah, this is interesting, actually. So the Fed Board of Governors, the 7-member Fed Board of Governors, there is no one on that whose term is up before mid-2026. Okay. So Powell's term goes through, I think it's May of 2026, which is, well into the next presidency. While we've heard some Trump rhetoric around the Fed, he actually said recently that he didn't plan to try to fire Powell. Firing Powell itself is something that has a lot of legal questions around it that I think a lot of people are skeptical that that's even possible. I think Powell has at least signaled an openness to staying kind of no matter who wins till his term is over. So I actually don't expect any big change, particularly right away, just because of the way that terms fall of the governors, that there'll be any big change. Of course, Fed governors can choose to step down at any time for all sorts of reasons, politics, health, family, whatever it is. So that's always possible. But in terms of a sort of required change or something like that, there's a good gap between when the new president takes office and when those terms are up. So I don't expect a big change. And I think that's probably, a sense of stability for the markets around the Fed, knowing that there's unlikely to be a big change in 2025 at least.
That's good.
Now, along those lines, the Fed is not supposed to be political, right? But there has been chatter that the Fed may kick the can down the road to after the election to then do something with rates just so they don't seem biased. Do you think there's any merit to that?
Yeah, I mean, we hear that all the time, and the Fed historically has, I think shown some reluctance to kind of get too close to the election in terms of making particularly a dramatic rate move. But in this case, I really feel like the data is driving it, and because Powell has always said consistently, we're watching the data. When we see the data get where we want, we're going to make a move. I think he's really laying the sort of groundwork for a possible September move. Could they push that off to November or December? Sure, that's obviously a possibility, but I don't think that's a big consideration at the Fed.
Yeah, I would agree with that.
I mean, if it's time to cut, then just get on with it, right? That's not really political in any way, but
right.
maybe a debate for another time. Should we shift to the actual election itself? I mean, we're recording this. I feel like we need to timestamp and date stamp this at some point, but we're recording this on Wednesday, the 24th. It's 11:19 a.m. specifically. So if news breaks, you know why.
Yeah, story of my life.
We haven't talked about it, right? I mean, talk to us about everything that's gone on. I mean, I guess not everything, but a lot of the headliners of what's gone on over the last even couple of days, weeks.
Yeah, I mean, I've been saying that it is both, what happened with the Biden situation was both completely unsurprising and at the same time utterly shocking. We've just never had a situation like this where the presumptive nominee has decided not to run for re-election 106 days before Election Day. Just a couple of weeks before the convention. It's an extraordinary situation. I mean, I've been really amazed at how quickly everything coalesced around Kamala Harris. I mean, she had commitments from all the delegates that she needs within 48 hours. She's, well past $100 million that she's raised since the announcement. It's not a done deal yet. The delegates still have to vote, and it looks like that will happen possibly in an electronic vote that'll begin around August 1st. And then we'll have the convention, which starts on August 19th. But we're looking at the early polling, and just here in the last 24 hours, we've seen some polls that show the race is very, very tight. There's been a couple of polls even that show Harris ahead, but all of the polls that have come out in the last day or so have shown within a couple of points in either way. I would be cautious around the polls for probably another week to 10 days. I would want to be kind of into early August before I really feel like the polls have kind of settled on this news, because, there's just a ton of energy around things right now. Change is interesting. And so I think it'll take a little while for the polls to settle. But I think there's no question it's a closer race now than it was a week ago when Biden looked like a very damaged candidate and Trump was clearly pulling ahead, not only nationally, but in the battleground states. So it is going to be a wild 15-week ride to Election Day. And, as a political junkie, I can't wait.
Yeah. Do you think, this might be too speculative, but do you think Biden may step down to give Harris more clout coming into the election?
I would be surprised at that. I don't know that's I don't think that's likely. I think he wants to finish out his term on his own terms and, sort of have the sort of grand finale. I have no more insight into that than anyone else, but I guess I would say I would be pretty surprised if that happened.
I just am amazed. And you said this, but is there any precedent to this? Because it just seems like every step of the way, there's something new that's been happening for the first time. And I don't know if that's the media today being in our face and blowing it up. I don't know if that's me not knowing enough about the history of what went on in, the late 1800s and 1900s. But is there any precedent other than maybe a death of people stepping away this late in the game?
Yeah, I mean, there's really nothing, certainly at the presidential level, that really compares. Everyone kind of points to 1968, which is when Lyndon Baines Johnson announced that he was not going to run for re-election. He did that in March, in a time when the primary process was not as front-loaded as it is today. So they were barely into the primaries at that point. And, so then you had time for a primary process to unfold. Of course, 1968 got crazier because Robert F. Kennedy won the California primary and then was assassinated moments after declaring victory there. That sent 1968 to a genuinely open convention, which is just not, I think what we're going to end up with here. It looks like everything is pretty wired for Harris to take the nomination. But so there are, I guess, some comparisons to 1968, but certainly in the most modern period, there's nothing like this that we've ever seen. So it's fascinating. It's strange. It's going to be amazing to watch how this unfolds.
Now, I'd love to get into some market and investment related implications for, red versus blue, but we alluded to this as well, that a lot of what happens is dependent on the makeup of Congress, right? The House and the Senate. Structurally, is there, based on the seats that are up for re-election, I know Republicans have the House narrowly, Democrats have the Senate by one seat. Talk to us about the potential makeup with this coming election.
Yeah, I say to people all the time, the markets care more about the battle for Congress than they care about the White House because, at the end of the day, presidents can and do say all sorts of stuff and make all sorts of promises about what they're going to do and all that. And we certainly see that and will see that on the campaign trail. But at the end of the day, it's Congress that has to pass stuff into law. And so, the markets watch what Congress does from a policy standpoint. And I'll give you a quick example. 2022, the CHIPS Act that was passed by Congress, big infusion of money into the U.S. semiconductor industry. You can draw kind of a line. These companies, got this money and benefited from it. They're building these plants. You know what I mean? There's this kind of sort of direct connection to, to a policy outcome that the market can kind of react to. So That's why I think it matters what happens in Congress. And just very quickly, you look at the Senate map, there are 23 Democrat senators up for re-election and just 11 Republican senators up for re-election. The 23 Democrat senators include the 3 who represent red states. That's in West Virginia, Ohio, and Montana. Those are very, very tough races. And in fact, that seat in West Virginia, which is held by a former Democrat, now independent, Joe Manchin, he is not running for re-election. The Republican governor of West Virginia, Jim Justice, is the nominee for the Senate seat. I mean, that's a cakewalk. He's gonna easily win that seat. So, they only need, on the Republican side, one more in the Senate. You've got really competitive races in Montana, Arizona, Nevada, Michigan, Pennsylvania, Wisconsin, a host of seats that Democrats are defending. So I think it is pretty likely that Republicans win the Senate in November. At the same time, I think Democrats have a shot. I don't think it's a slam dunk, but I think they have a real shot at winning the House. Some of that comes from the dysfunction under Republican leadership over the last year, but also they're just, it's a very, very close margin. And there are sort of, when you look at House seats, there are 435 House seats, maybe 40 are competitive. And you look at those ones and you're like, well, where is there a congressman or a congresswoman in a district that voted for Joe Biden and he or she is a Republican, and the vice versa, where those are kind of flippable seats. And they're just more, I think, options for Democrats to win those kind of flippable seats. So I think it's a chance, probably a little above 50-50, that the Democrats win the House. And if that happens, we would have history made. We have never had an election when the House and Senate have flipped in opposite directions in the same election. So that would be fascinating, and of course that would produce a split Congress again, and all the problems that potentially come with that in terms of getting things done.
Right.
Well, problems in terms of getting things done, but maybe not problems in terms of markets. Right.
Yeah, I mean, I think markets, kind of tend to like the sort of the gridlock approach because neither side kind of gets to overreach and that sort of thing. But, as I said, I mean, not only have the tax issue looming in 2025, but we also have another debt ceiling fight. And that's one that the markets do pay a lot of attention to because, we have never defaulted. We've come right up to the edge of default, and markets tend to get jittery around that uncertainty around the debt ceiling. So that's one that, I think the markets will be watching to see what the outcome is and what the outlook might then be for those battles next year.
Can we explore that a little further? I know the debt is larger than it's ever been, but interest payments, I think, are more, you could debate whether it's more important versus the actual nominal amount of debt. But with high rates and taking on a lot of debt, the cost of financing that debt is really important. So I'd love if you could explore that a little bit further.
Yeah, the interest on the debt just passed defense to become the third largest element of the federal spending, essentially. Number one is Social Security. Number two is Medicare. Number three now is interest on the debt. And that will actually, before the end of the year, pass Medicare to be the second largest. So I think it's much more on people's minds. Look, the reality was, for much of the last decade or so, people were able to say, well, it's not really costing us much to service this debt because rates were down near zero. And I think that was a little bit of a kind of a default fallback for people when pressed on Capitol Hill about the debt and the deficit. Now you don't have that excuse. The problem with the debt and the deficit is, when you look at those big things, Social Security, Medicare, defense, interest on the debt, veterans, a few other things, those things comprise about 72% of all federal spending. The discretionary part of the budget is 28% of spending. You can't cut enough from there to really make a difference. And, we have a deficit of $1.6, $1.7 trillion. When you look at these spending cuts arguments on Capitol Hill, right, you see members of Congress say, I'm drawing a line in the sand, we're going to cut spending. And then they spend a week arguing about cutting $8 billion from the IRS. Well, $8 billion in a $1.7 trillion deficit is
a drop in the bucket.
It's meaningless. And that's where the fight is. So the fight is sometimes, kind of this, it's almost optics as opposed to actual substance. At some point, you have to raise some taxes on somebody in order to make the math work.
Yeah,
cut spending and raise taxes.
So bumping out required minimums, raise taxes, delay the age, the full retirement age of Social Security.
Yeah,
there's some things that you just can't avoid. I mean,
you set aside all the policy, right? This is just math. I mean, you just you can't make it work. So, is Congress going to take on those big difficult votes, those big challenges? I mean, they haven't so far. So it's hard to anticipate that that's going to drastically change next year or the year after that. So it's a huge issue.
Are you worried about our national debt?
I am worried about it. I don't think it's a short-term worry. You certainly look at robust Treasury auctions and stuff, and there's clearly a market for buying our debt. In fact, individual investors, because of the return right now, are a big buyer. Foreign buyers continue to be there, but it's clearly unsustainable. You can't stay like this forever, and the problem is, politically speaking, the choices of what to do about it are bad. Right? So, those are votes that are really, really tough to take because they end up in campaign commercials, from your opponent in your next re-election battle. And so it's discouraging, but, I don't think we're at sort of, big crisis yet, but we're heading there.
When you say we're heading there, would you be able to put like a number on that? Is that a decade, 2 decades, 3 decades?
Oh, I think it's probably less than a decade.
Less than a decade.
And again, it's hard to project these things, right? Are there changes that are going to happen over the next couple of years that start getting you back in a trend heading in the right direction, right? It's not going to be fixed all at once. And, we're not going to get rid of the national debt. But getting the federal deficit, back towards being more balanced, a budget that's more heading towards balance. I think that's, those are the kinds of things you want to see. It's almost directionally is as important as actually solving the numbers. So that's what I'm looking for over the next few years is do we get some, going back in the right direction in terms of addressing some of the deficit issue.
Right. I think as Adam brought up, it's not necessarily hard to put us on a corrective path. It's just when are they going to be incentivized to do it?
Yep. I think that's absolutely the case. And, that's true with a lot of the big issues. I mean, Social Security is another one, right? I mean, everyone knows that Social Security is a problem and we've got to address it sometime before 2034, which is currently the date that if nothing changes, it would stop being able to pay out full benefits. But again, all the things to do about it are politically difficult. You can raise taxes, you can cut the retirement age. You can raise the retirement age, you can cut benefits, you can raise the amount of income that's taxed. These things are tough votes for a lot of members of Congress. And so, just waiting for the time when, you've got a sort of movement towards really addressing those things.
So right. 2023, 33, excuse me. I'll figure it out.
It's funny, I have no insight on this, but I sort of look at 2027, which is, we've gone through a midterm election. The presidential election of 28 hasn't really gotten going. That's my kind of sweet spot for maybe taking some action. But, like I said, I have no particular insight in that.
Right. So I just want to circle back because we really skipped over talking about the Trump campaign. With the assassination attempt on former President Trump and everything else going on, how do you think that impacts, his electability?
It's interesting. I mean, I think first of all, there's some sort of practical things. I mean, he has, I think, even just and today his campaign has said, they're just not going to do these outdoor rallies, which I think he really was an important part of what he liked to do and the style of campaign that he liked to have. And I think, in the wake of the assassination attempt, they're just not going to be able to do those rallies. They're going to need indoor rallies where they can, in a stadium where everybody has to go through a magnetometer to get in, and you can just much more control the environment. So I do think there'll be some kind of practical implications. I think the assassination attempt, certainly made him, if it was possible, even more popular with his base. But it's amazing. I mean, given the speed with which things are happening in this campaign, it's incredible that was just 2 weekends ago that happened. And you think how much has happened since then, obviously, to change the race in a whole different direction. It's just, I mean, that's why I say this next 15 weeks until Election Day, there's going to be so many twists and turns. I just can't imagine.
Right. You could say what you want, whether you like him or don't like him. But when you look at the video of, the bullet grazing his ear and then him getting up and putting his fist up, that's an emotional moment, right? That's something that, you really only ever see on TV, right? On a planned script.
I think the photo, the kind of photo with the flag over it and his fist raised and the blood, will be one of the iconic photos of my lifetime. Yeah, I mean, definitely. It's an amazing thing, but it's also incredible sort of how quickly that has moved into the background since it happened. That's
social media for you.
Yeah.
Right. So for investors out there who might be nervous about, what's going to happen because of the election, what do you think the big takeaways are for them?
Yeah, I mean, a couple of things, and I've got a couple of charts that I can show. I get asked these kind of questions sort of all the time about, how do the markets think about elections? And, one that I get asked a lot is, what's the best political configuration for the markets? And I've got this chart that looks at the Dow Jones Industrial Average, goes all the way back to 1901. And what you see is that the best political configuration for the market performance is the one we have right now, a Democrat in the White House and a split Congress, except it's the rarest So this is only the 7th year that we've had this particular configuration. And I use this also to remind investors that there's a huge problem with small sample sizes on all this kind of data because, elections only happen once every 4 years. And, you have something like this where you have only, a relatively small number of examples of it. And so that's something that I think is really important. The other one I get all the time is, how do markets do in election years? And this chart that I have up here shows that, S&P 500 going back to 1928 averages about 7.5% return. Pretty good in an election year. But when you dive into that, and this is actual S&P 500 performance in each election year, what you see is that there are only 4 years that the market has gone down in a presidential year: 1932, 1940, 2000, and 2008. What was going on in those years? 1932, Great Depression. 1940, Europe is falling apart. We're about to head to World War II. 2000, tech bubble burst. 2008, great financial crisis.
Right.
The 4 presidential election years that the market went down, it went down for reasons having exactly zero to do with the fact that it was a presidential election year. And I think it's a good reminder that markets don't really care about the election itself. They definitely don't care about the micro dramas that are going to happen between now and November 5th. And you're going to see a lot of people out there on the financial news channels and elsewhere saying, the markets are going to do this if so-and-so wins, and it's going to be good for this sector, and it's going to be good for these types of companies if this candidate wins. It's going to be bad if this candidate wins. There's just no real historical evidence that any of that is true. So I try to kind of remind investors that, ultimately, to the degree that Washington stuff matters at all to the markets, it's about Congress passing actual laws that have an impact on the economy, that have an impact on individuals, that have an impact on companies. It's not sort of who's winning the horse race.
I heard a good point of view in relation to that, where even really, really great presidents only pass, 2 or 3 major issues throughout their 4-year period or 8-year period. And,
yeah, absolutely. It's absolutely true.
Yeah. And it's the, even that, whatever, all these grand promises that everyone makes during the campaign trail, I mean, that's really aimed at their base to get people to come out and vote. And realistically, once these, the people take office, they do have to work with Congress, and they have to be more reasonable, and they come back towards the middle. So I think this is a really important, descriptive way to look and say, hey, yes, there's been some bad years during election years, but it's not because of the election, right, first and foremost. And it has zero impact on what's going to happen in the future, which is what we should all be concerned with.
Yeah, absolutely. And, the other thing about elections, I'll pull up one other chart here. The other thing about elections is that they're emotional. And people in this election are really, really emotional. I've been talking to clients for months, and, people are literally raising their hands and saying, should I move to Portugal if, this candidate wins or that candidate, loses or whatever. These really emotional reactions. And the big thing I've been trying to tell investors is whatever emotions you have around the election, those are probably going to increase as we head into the fall. On November 6th, after the election, you're going to have strong feelings about whatever the outcome is. And those feelings are a terrible mix with your investing decisions. And so I try to remind clients of this chart in particular. This chart looks at the growth of $10,000 since 1961. If you had invested only when a Republican was president, you'd have about $100,000 today. If you'd invested only when a Democrat was president, you'd have about $500,000 today. But of course, if you kept it invested the whole time, regardless of who's in the White House, you'd have $5.1 million today. Wow. And that's just a really good reminder that, who is in the White House and who controls Congress and how you feel about this policy or that policy really shouldn't come into play in your investing decisions. And so I encourage people to talk to their advisor and, before the election if they're feeling worried about the election, and talk through all of that, because you just don't want to make some decision that thinks that the the outcome is going to determine this. And we've even had an example of that just in the last few weeks, right? There's been this kind of buzz around the so-called Trump trade, which was as some traders and investors started to look at the polls and see that Trump was polling pretty significantly ahead from Biden, you're looking at what kinds of stocks might benefit from an environment of lower taxes and lighter regulation and higher tariffs and that sort of thing. And a couple of weeks later, you have an entirely different opponent, and people are unwinding those trades as there's more uncertainty going ahead. So
right.
I think that's the really important takeaway is just, don't let those emotions take over in what is going to be an emotional a few months.
Right. I think it's important to remind everyone that Trump is pro-energy, right? They're pro-energy companies. But when Trump was in office, the energy sector performance was pretty weak, and green energy companies actually did better. Biden was more pro-green energy, right? And green energy stocks performed very weak under his presidency, and the energy sector actually thrived. So yeah. It's very hard, and this is one small piece of the puzzle that the market trades off of. I love your slide here because I think it helps ground people in reason. I don't blame investors for trading on emotion, but we have to realize when we trade on emotion, we're putting blinders up. We're not going to see the full picture, and it's important to take a step back and look at the full picture, ground yourself in reason.
We've talked, I know, Austin, you and I have discussed the chart where, consumer sentiment, it measures it over time. And investing when sentiment is low is generally you outperform after that. In the next 12 months, say, right, when people are pessimistic. If you break that out into Republicans and Democrats, whenever a Republican is in office, consumer sentiment among Democrats is far lower than Republicans. And as soon as the tides shift, you can see the sentiment levels flip-flop, right? So this is actually how people feel. Emotions are very important this time of year and in this type of cycle, but this chart's just amazing. It's great.
Yeah, I 100% agree. I think people overestimate the impact of politics and policy on the markets. And it's ironic. I mean, I have an entire job that is talking about policy and politics and the markets. And people are often surprised that I go out and give these presentations. And at the end, I'm like, yeah, and not a lot of this really matters to the markets, and you shouldn't overestimate it. So it's a kind of like, well, why do you have a job to do this? But part of it is just that message that it's really easy, particularly when the news is focused 24/7 on the election. It's just really easy to sort of overestimate how much of an influence that's going to have. We are a million miles from big policy decisions like tariffs and taxes and the debt and all that sort of thing. We got months and months and months before that stuff is even going to start to be debated. So just a really important reminder to kind of take it all with a grain of salt and not make any dramatic decisions.
Yeah. So this has been great. So one of the things that we do with our guests at the end of every podcast is we have a what's new segment. Maybe it's something you're reading, listening to, a life experience that maybe someone in the audience could glean something off of, maybe a suggestion on a music or something like that. So what's new? What's new in your life, Mike? I know a lot of it's revolving around politics right now, but
what hobbies are you into outside of politics this time of year?
Well, I'm a music nut. I have a kid in college. I have one out of college, one in college, and one in high school. And actually, I am going tonight with my two younger, my 16-year-old and my 21-year-old, to see Faye Webster in concert. She is kind of an indie rock singer, songwriter. She's great. We're really looking forward to that. But, I spend a lot of my free time these days out on a soccer field. I've got a 16-year-old whose whole life revolves around soccer. So spend a bunch of time on the soccer field watching my kid play. And in fact, I was actually sitting in the bleachers at my son's soccer game when my phone went crazy last weekend with the news that Biden was dropping out. And so I thought that was a perfect, sort of state of my life. It's that these two things I'm spending the most time on these days kind of came together in that moment. So music is kind of my thing right now. I'm spending a lot of time going to concerts with my kids while I have time to do that before they all scatter off. And it's been a great way to connect with my kids and right. Really enjoy it. So that's kind of the thing I'm spending time on.
Yeah, family is a great way to stay grounded. It's very easy to get wrapped up in our day to day, but it's nice to have something that you enjoy that's going to make you want to come home and take a break from your work life.
Yeah, 100%.
Well, Mike, appreciate having you on. To the listeners, appreciate you guys tuning in. Please remember to like and follow on all your favorite social media, podcast, YouTube, etc. We read the comments. We enjoy the likes and all that fun stuff.
Yeah, thank you for coming on, Mike. This was actually our first. You are our first external guest in the last year plus that we've been thinking of this and doing these podcasts. So I think it went well. Hope you enjoyed it, and thanks again for coming on. Yeah,
lots of fun. Thanks for having me. Great conversation. Really enjoyed it.
Appreciate it.
Try to stay healthy and survive this next couple months.
I'm just trying to keep my head above water. That's all.
That's it.
Awesome.
Appreciate you having.
Thanks so, Mike.
All right, guys. Thanks so much.
All right.
Appreciate
it. Thank you,
Mike.
Thanks.
Well, that was great. I don't know, Austin, did you enjoy that?
That was great. That was great. Glad we had him on.
There's just been so much going on the last couple of weeks, and again, this is Wednesday morning, the 24th. I don't know what's already changed in the last hour. I don't have a Twitter alert popping up on my screen, but I did want to just recap a couple of things and reiterate for our listeners what was important from a financial perspective. The first being the tax law changes that are coming down the pike, right? At the end of 2025, the TCJA, the Tax Cuts and Jobs Act that Trump put into place in 2017, will be sunsetting unless something changes, right? So taxes will go back up for the highest earners. The estate tax level, which I think is the most important thing I want to reiterate to listeners in terms of a planning perspective, people should get on top of that now and not wait until 2025 or the fall to start gifting assets and structuring trusts and things like that, right? I would also note that this applies for folks that have probably north of, the 14 to 20 million range, where the federal exemption is going to come down to about 7 million per person adjusted for inflation.
Right. This absolutely needs to be on your radar if you fit in that bucket. Mike mentioned that he thinks that there will be a solve for this, but at the end of the day, you want to stay ahead of this. We can't just rely on a solve, right? We don't know what that's going to look like. And attorneys are just people, right? They're people. They get bogged down. So, everyone's going to be flooding to them last minute. So I would definitely reach out to them, reach out to us. We can connect you with somebody to really, put some pen on paper and think this through.
As with any profession, you can do things well, you can do things cheap, and you can do things quick, but usually you can only do 2 of those at a time. So if you want it done quickly and done well, it's probably going to cost you. If you want it done cheaply and quickly, might not be good quality. And if you want it done well and cheaply, it's probably going to take a while. So figure that out ahead of time before you need to. Another thing I wanted to chat about, Fed policy. I mean, come on, can the Fed just cut rates already? If they know that they're going to do it in September and the market knows and the data is showing them that it's fine, just get on with it.
Right.
The whole aspect of the Fed being apolitical and everyone making a big hoopla out of this is just, in my opinion, ridiculous. I also didn't know if he said, when Mike was talking about Trump firing him, did he mean ahead of his term ending in 2026? I'd have to look into that. I don't know if there's any precedent for that, but I thought that was interesting. or if firing, with air quotes, just means that he won't bring him back once his term ends and elect someone new.
Right.
The last thing I want to reiterate was just gridlock, right? For investors, that's probably the most important. That's what I'm most concerned with is, whoever's in office, if there's unanimity across Congress, then it's going to be a lot easier for legislation to get passed. And that could have unintended consequences down the road. And business owners can't plan, right? So major Fortune 500 CEOs can plan for the future if they know that it's unlikely major legislation is going to get passed one way or another.
Right. Gridlock is generally good. The market likes when not many decisions are being made because that cuts some of the uncertainty out of it. So it'll be interesting to see what happens. And then also, as we talked about on the podcast, I wouldn't put too much weight in any one speculative bet, right? Just because, Trump is big on energy doesn't mean energy is going to do well, right? And we saw that when he was president, his term last time. So, we'll have to see how it all unfolds. But I think it's good. You mentioned keeping your eye on the Fed, right? We need to be prepared for that. Where are you with your bond allocation and your duration? Where are you with your exposure to large cap, mid cap, and small cap US? Things like that. Those are definitely things that you should be thinking about if you don't have an advisor, and that your advisor should be thinking about as well.
Yeah, and just chat. Let's have a conversation, right? I tell my clients that all the time. If you're worried about something, let's talk about it and work through what it is you're actually worried about and see if it is something we need to make it a change to your financial plan and your asset allocation and so on and so forth. So,
right. That's important. Your plan should lead all of this, right? Yeah. If your plan is telling you to be X% in equities, that should be the main focus. We can always massage around it, right? But that's really your core there.
All right. We've had 46 presidents and, the stock market has done great over different periods of time. And we have little blips along the road, but, fearing or timing for those blips is definitely not the right way to go about investing.
Right.
Awesome. This was great. I'm already eager to have our next external guest on. It's always refreshing. I love hearing from our team, but
yeah, no, we have a good lineup coming up. We have a good lineup of people coming up. I won't say any names in case anything changes, but we do have a good lineup of people coming up.
Yeah, it should be great. So, all right. Well, Mike told us what's new for him. Austin, lead us off. What's new? What's new in the life of Mr. Hagaman?
So do you have a dog, Adam?
No, we're thinking about it, but
okay.
No.
So we have 2 dogs, 2 Australian Shepherds, very smart. One's 6 years old, one's about a year. And we just moved into a new home. And while we were moving, we had someone watching them. And our 1-year-old ended up slipping away. And by slipping away, he sprinted away and got away from the person who was watching him. And it caused this 2.5 hour panic.
Oof.
And it was very scary in the moment. I mean, they're a part of your family, right? I couldn't imagine. I stopped packing and I got in my car and I was thinking I'm not going to find him. But if I do find him, it's probably going to be because, he got hit by a car or something. And I want to be there for him if that happens. That's what's going through your mind. Just straight panic. And we realized that, we had called the local communities, so Manasquan, Seagirt, Spring Lake, New Jersey, the cops, and they were on it. They got the people of Public Department Works in their little orange golf cart things going around.
That's great.
We were rolling down our windows just asking if anybody's seen the dog, and it was really social media that really helped. So there was a social media post on the one of the Manasquan social media sites, and now we look at it and we kind of laugh because there's a bunch of pictures of just our dog's little butt, either walking in the middle of the street or heading over railroad tracks, and just people telling us where he was, so that we were able to kind of narrow that zone down. Wow. And we eventually found him. He was covered in mud. But I wanted to bring that up because it just shows you kind of the power of community and also the importance of social media. So if you lose your dog, one of I think the first things that we didn't think of, it kind of just happened naturally, is, post about it, see if anybody saw him, because it was a heartache. He's fine, everything's fine, but thank God that the community kind of helped rally around, even though they had no idea who we were or who he was. But it was great. And
lessons learned, they make GPS dog collars, right?
Oh, yeah. I have air tags on both of them now.
There you go.
We'll be able to follow them like an old school Batman show where we're in the car just following the little beeps. But
yeah. I don't have much new with me. It's like the dog days of summer and my kids are in camp and, they're exhausted when they get home. But you've got a special event coming up. So that's my what's new is I just am planning a trip down in New Jersey. You want to tell us what's going on? Maybe.
Yeah. I'm getting married August 16th. So we're
looking forward to that. We're
pretty excited. A lot going on between the move and getting married. So we're pulling our hair out, but it's a good thing it grows back. We'll get through. It's been fun.
Yeah. Awesome. We're looking forward to that. It should be a good time. So, and we're excited to celebrate.
Yeah. Meg's going to love you for bringing that up.
I couldn't let it slip. I think our next recording is going to air afterwards. You'll be somewhere on your honeymoon, so we'll have something to talk about when you come back. But wanted to share that with the listeners.
Great. Well, thank you, listeners, for tuning in. Please remember to like, share, and follow.
Awesome. Thanks, everyone, and we'll see you next time.